Also, some big developments on the China story this morning. Futures have been swinging this morning on conflicting reports about whether China is committing to the agricultural purchases in the Phase 1 trade deal. We expect to get more clarity at 9:30 a.m. Eastern Time. That's when China's State Council Information Office is hosting a briefing to talk about issues on relevant progress of China-U.S. economic and trade consultation. Joining us right now to talk about the market's reaction and what happens next is J.J. Kinahan. He's chief market strategist at TD Ameritrade. Also, CNBC senior markets commentator Mike Santoli. Mike, let me just ask you, we've been playing this game for a long time. Yes, they're going to sign a deal. No, they're not going to sign a deal. What happens today? It feels like this is some sort of a culmination.
It is. It's definitely a culmination of this entire process. I mean, from the market's perspective, it has been far less about every little detail of a deal and more about, do we suspend the tariffs due to go on Sunday? Do we get beyond that? Do we roll them back? We spent yesterday pricing in a relatively high likelihood that, in fact, we get past these tariffs, they don't get imposed, and maybe there's even something better than that. I also think, though, it's important to recognize that all happened on a day when we got some clarity on Brexit, when you had the Fed come out and said, look, we're going to do everything possible. We're not going to allow stress in the funding markets through a year. And we even got movement toward a federal budget deal and no shutdown. So you have this moment in the markets where it's kind of like, what's there to worry about if, in fact, we get over the line with China? And the question is, has the rally already told you that there's a lot less to worry about? Or, would that finally create a little more of a relaxed atmosphere and a further upside chase through year end?
JJ, what's the answer to that question?
Well, I don't think everything's it's great that we had all this stuff, but I still think it leads to a lot more questions, to be honest with you, Becky, because with Brexit, again, it's great that we have clarity on what's going to get done, but nobody knows the process because no one's ever done it before. And so with the China deal, also, I warn people about a little bit of exuberance only because until pen actually hits paper and we actually have a true agreement on something, it just makes me a little bit nervous that it's the constant promise, 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 promise. So we need to see something that's a little bit delivered. Actually, I think as we head today and into next week where we have quadruple witching, I think next week actually becomes one of the most interesting trading weeks of the year because it's the last full week where you have a full roster, so to speak. People will start taking off for the holidays. And it'll be interesting to see if, I think we've seen a lot this last couple of weeks of people trying to catch up a little bit, get names in their portfolio they didn't have. I wonder if next week we're going to come under pressure because so many stocks have done so well this year. People will want to take some profits and book some for the year. So we'll see if the momentum from this week can carry in the next week.
Is that your plan? Take some profits?
Well, I think overall it's not the worst idea for a lot of people to take some risk off the table. This has been a phenomenal year for many, many stocks. And not that you have to take off your whole position, but you can certainly take a little bit off and, take some risk off and lower your cost basis.
Hey, Mike, as we get into the beginning of next year, we've got to get through the next couple of weeks. But then as we get into the beginning of next year, what do you think the big issues are that will kind of be pushing trade one direction or another? And by that, I don't mean trade talks, I mean trading on the floor.
I think the issues right now are going to be, let's make sure the economic numbers do improve as the markets have been trying to indicate and handicap for a few months right now. But if you get a trade deal of any description, that you don't have, a new imposition of tariffs, you don't have these kind of friction in global trade flows additional to what we've had, I think the markets can give it a pass for a little while and say we have confidence that things are going to get better even before the numbers actually do. The big question is, are we going to see a real kind of speculative rush and have sentiment get way ahead of itself and have some kind of real blow-off before we get to that point? We're not there yet, in my view, but that's probably the thing to look for, is to see if sentiment just gets a little bit too happy and therefore trading positioning gets a little vulnerable. I don't necessarily think we've reached that yet.
JJ, we had one guest here earlier this week who was kind of pounding the table saying, look, it's going to be all about earnings next year. All of these companies are going to come in with better earnings. The economy is going to look better than anticipated, and that's why stock prices will continue to climb. What do you think of that scenario?
Well, I do think we have that opportunity for earnings to look better. No doubt about that. And earnings always drive the markets longer term, but we still do have some of these other issues overhanging. I will tell you the one thing that makes me nervous as we head in the next year, Becky, is the fact that we haven't really heard companies talking about spending money on infrastructure. And I think as we look at, 2 years out, that's the thing that makes me most nervous, is that companies have held back for the last 6 to 9 months on spending money on infrastructure as we've had this tariff situation overlooming. And if we don't start seeing that soon, that's the kind of thing that really is going to make growth a lot tougher as we get further out. So in the long term, in the shorter term, I agree. I think earnings will look better, but in the longer term, it still makes me a little bit nervous that if we don't start spending some money now in these companies, it's going to be very, very difficult to continue the growth path that we could be on.